if you're looking at a project, right, and you're trying to determine what the risk profile is for you, because in any investment, you want to understand the risk profile. In oil and gas specifically, that can be challenging to do because it's a very technical business. But when you're going into an area and they're deciding if someone's proposing to drill a well in a certain area, or this is where they're going to go, you want to understand, is that in an area where there is historical production? Because in the name of the game in oil and gas is data, data, data. Kind of like real estate is location, location, location. You need data. To assess the risk on an oil and gas project, you need data. So if you're in an area where there is no historical or legacy production, it's going to be very difficult for a geologist to map the formation, to get old type wells and logs, to basically map the formation and determine all kinds of characteristics of that formation before you drill it. The other critical thing to understand when you're looking at an oil and gas project, or if it's being proposed to you, is there infrastructure in place? So if does the operator need to go put roads in? Do they have to put electricity in? Is there no place to dispose of water? So for example, if you've got to drill a saltwater disposal well, that is extremely expensive on an initial project. So pipelines, if it's a gas project, are there pipelines in place to get your gas to market? These are all things you need to understand before you go into a project. And you want to understand if your sponsor knows the answer to these questions. The third bullet point is, again, data points. If someone is proposing to you, you're looking at a project and it is 4 horizontal wells or 4 vertical wells, and here's the area. You want them to be able to show you on a map, okay, look, where is the closest data point that is going to do the exact same thing you're proposing to do? So if I'm going to tell you that we're proposing to go drill a horizontal well in what's called the San Andres in New Mexico, and here's where we're at on a map, here's where our lease positions are. Well, where is the closest horizontal well that's the same formation, the same proposed well that you're going to propose to me? And if you don't have any within 5 miles, I'm just telling you right now, that's a pretty risky project. Even within 5 miles, you ideally want at least multiple data points, and 5 miles is the most. 2 to 3 miles is more ideal risk management. But if you're looking at a project and you're in a field with no historical production and there are no data points within 5 miles, you are looking at what's called a wildcat deal. So that is a very highly exploratory deal that is absolutely a binary outcome. You're either going to hit a great well or you're going to get a dry hole, and there's a good chance you're going to get a dry hole. So data, again, this is data infrastructure. This affects your costs. This affects your operating expenses. You always want to know, is it a multiple well project, because you learn from one well to the next. And you do want to understand the ESG goals. You really want to understand from your operator today is, what are they doing with their gas? Are they flaring gas? Are they repurposing gas? So that's a big question to ask.